Hey guys, it is Julie here with JT Wealth, and today we're taking a look at dividend stocks for the month of July. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The month of July is upon us. I hope all of your summers are off to a great start. So that of course means that today we're going to look at some stocks that all have ex-dividend dates in the month of July. Now these are dates that you have to own the stock before in order to be eligible for the next dividend payment. So by getting it close to this ex-dividend date, you don't have to wait long to collect that passive income. So we'll be taking a look at these companies, what it is that they do, the dividend details, and of course how Wall Street analysts are weighing in on the TipRanks platform. If you enjoyed today's video, don't forget to hit that thumbs up button and make sure to subscribe to the channel as well. Now let's dive right into these dividend stocks for July. Starting off with the stock with the nearest ex-dividend date is Bristol Myers Squibb. Their stock trades under the ticker BMY with a market cap of over $135 billion. The stock is priced at $64.52, and they have been on a decline this past year, down 13%, but hopefully are nearing a bottom here soon. Bristol Myers Squibb is a global pharmaceutical company. They develop, license, manufacture, distribute, and sell biopharmaceutical products in several therapeutic areas, including cancer, HIV and AIDS, cardiovascular disease, diabetes, hepatitis, rheumatoid arthritis, and psychiatric disorders. Bristol Myers has been around for over 100 years and started paying a dividend back in 1970. They currently pay a quarterly dividend of 57 cents per share for a dividend yield of 3.47, well ahead of the sector average, and a healthy payout ratio at 21%. Their next ex-dividend date is coming up soon on July 6th for payment on August 1st. And their next earnings report will be on July 27th. Their previous report on April 27th came out with a solid earnings beat. The company reported revenues of $11.34 billion, and earnings per share of $2.05 came in 8 cents ahead of expectations. The stock currently comes in as a moderate buy with 8 current analyst ratings. They have 4 buys, 3 holds, and 1 sell, and an average price target just above $77 per share, which would be an upside of 20%. We can see our most recent ratings here are a couple of weeks old. We have a buy rating with an upside of 31% and a high-end price target of $92 from last month. We do have a sell rating with a downside of over 8%. Next up, we have MasterCard, and full disclosure, this one does not have the most exciting yield, but I think it is a great defensive stock, so it's worth taking a look at. With a market cap of $374 billion, their stock trades under the ticker MA, currently priced at $395 per share. They have seen growth of 14% year to date, including growth of 8% over the last few months. Of course, MasterCard is a fairly well-known payment processing technology company. They offer payment solutions like credit, debit, prepaid, commercial, and payment programs, working with consumers, financial institutions, merchants, governments, and business. MasterCard has been paying their dividend since 2006. And they also have an ex-dividend date of July 6th with a payment date of August 9th. Their current quarterly dividend is 57 cents per share for a dividend yield of 0.54%, which yes, I know is not the highest there, but a very healthy payout ratio below 20% as well. They also have a solid track record of earnings beats, which you can see here in their past reports. We had one miss back in 2020, but we've had solid beats since then, including their last one on April 27th, where they came in 9 cents ahead of estimates. The next is coming up on July 27th, where analysts are anticipating earnings of $2.93. And analysts seem optimistic on the stock. We currently have 19 unanimous buy ratings from Wall Street. With those ratings, we have an average price target of $434, which would be an upside potential of 9.8%. The most recent came just 4 days ago with an upside of about 10%, and many ranging from that 1 to 20% upside point. Third up, we're going to move to the energy sector with Schlumberger. Their stock trades under the ticker SLB with a market cap of about $70 billion, currently priced just shy of $50 per share. They've seen some big growth over the past year, but if we look at just the last 6 months, they're fairly flat and even down a few percent. Schlumberger is an oilfield services company, providing technology for reservoir characterization, drilling, production, and processing to the oil and gas industry. They operate through 4 divisions: digital and integration, reservoir performance, well construction, and production systems. Schlumberger paid out their first dividend back in the year 2001. and they currently pay a quarterly dividend of 25 cents per share for a dividend yield of 1.58% and a payout ratio of 34%. Their ex-dividend date is also July 6th, but a bit quicker turnaround for their payment, which comes out on July 13th. Now, these guys do have a fairly steady record of increasing, but did have to drop the dividend back in 2020. They'll be sharing their Q2 earnings report on July 21st. Analysts will be anticipating earnings per share of 71 cents, which is a notable increase over the previous years. And Schlumberger does have a solid track record of exceeding those analysts' expectations, with their last report coming in 3 cents ahead. This is another company that is well liked on Wall Street, coming in with 10 unanimous buys. And with an average price target of nearly $66 per share, that would be an upside potential of over 33% from current prices. Taking a look at our list here, a lot of those price targets are actually north of 30%, which is pretty impressive. On the low end, we have a 21% upside. Okay, now we're going to actually move a bit later into the month and away from that July 6th ex-dividend date. Next up is maybe a bit of a controversial pick as far as it comes to dividends, but I think there is some good potential for both dividend and stock growth. We're going to be taking a look at Delta Airlines. Their stock trades under the ticker DAL with a market cap of nearly $31 billion, currently priced at $48 per share. Now, their stock has really taken off over the last few months. Year to date, we've seen growth of 47% and nearly 40% just in the last 3 months. Now, the reason that I say this could be a controversial pick is because Delta Airlines did suspend their dividends starting back in 2020 with the pandemic, but they just reinstated it this quarter. That dividend is going to be 10 cents per share with an ex-dividend date of July 14th for payment on August 7th. And I know we hate that they cut their dividend back in 2020, but prior to that, the company did have a good record of increasing that dividend by a good amount every year. And the stock has been rising as the company is forecasting higher than expected profits for the next quarter as they see strong summer travel demand. Their next earnings report will be coming out on July 13th, where analysts are anticipating $2.34, a notable increase from the prior year. Now, they did come in with a bit of a miss here in the last quarter and have kind of a checkered history here of the last earnings reports, so we'll see how things come out. So things could be a bit more of a gamble here with the Delta Airlines stock. But analysts are feeling bullish. Once again, we have unanimous buy ratings, this time from 15 analysts. Their average price target comes in at $57 per share, which would be an upside of 19%, with the most recent rating coming in just today from a 5-star analyst with Citi with an upside of 14%. We can see a lot of double-digit upsides coming all within the last couple of weeks. Now, to balance out that maybe riskier dividend stock there, we're going to switch things over to a dividend king with Colgate-Palmolive. With just shy of a $64 billion market cap, their stock trades under the ticker CL, currently priced at $77 per share. Now, they've been fairly flat the last few months, up 3%, and overall fairly flat the past year with some ups and downs. Colgate-Palmolive is a well-known household brand and probably a name you recognize from the drugstore aisles. Their products range from household, personal care, oral care, healthcare, and veterinary products, selling their products across more than 200 countries around the world. They have well-known brands like Colgate, Speedstick, Ajax, Soft Soap, and Hill's Pet Nutrition. The company has continuously paid a dividend since 1895. To do the math for you, that is 128 years of dividends. Their current quarterly dividend is 48 cents per share for a dividend yield of 2.45%. Their ex-dividend date is July 20th for payment on August 15th. And also at the end of the month, they'll be sharing their latest quarterly results. Analysts will be looking for earnings of 74 cents per share, which is a slight raise from last year's, but definitely in line with their normal range of earnings. This is one of those more slow and steady stocks with that really stable dividend, so analysts are a bit less excited about growth potential, but it does come in as a moderate buy. That is based on 7 buy ratings and 8 holds. The average price target of $81 would be an upside of over 5%, with a mix of buys and holds coming here, and 1 buy rating with a big downside from a couple months ago. And last but not least, we have another company with a very long track record of dividend payments with the Royal Bank of Canada. Trading under the ticker RY, their stock has a market cap of about 176 Canadian dollars, currently priced at $96 per share. Now, they are up about 4.5% over the past year and about the same over the last 6 months. The Royal Bank is one of the largest banks in Canada. The company has over 97,000 employees, serving 17 million clients across the Canada, US, and 27 other countries. Their business operates in several segments, including personal and commercial banking, wealth management, investor and treasury services, capital markets, and insurance. The Royal Bank has been paying their dividend since 1870. That is 153 years. And their current quarterly dividend is $1.02 per share for a dividend yield of 4.09%. Their ex-dividend date is closer to the end of the month on July 25th with a payment date of August 24th. Now, the bank did come out with a slight miss in their latest earnings near the end of May. For their second quarter, they reported revenue of $20.69 billion, but earnings per share of $2 fell 10 cents short of estimates. The next report will be coming out on August 24th, where they're anticipating about the same, $2.10. And analysts are currently a bit more divided, with the stock coming in as a moderate buy. That breaks down to 5 buys, 3 holds, and 1 sell. The average price target of $102 would be an upside potential of 6%. And we'd see a lot of our ratings from the last month after that earnings report. On the low end, we do have that sell with a downside of 4% and a high-end buy rating with an upside of nearly 14%. So there are 6 stocks, all with ex-dividend dates coming up in the month of July. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys and what other dividend stocks you have your eyes on lately. Always keep in mind these videos are never a suggestion to buy or sell any specific stock, just providing from information and entertainment. Please make sure you always do your own research before making any investment decision. If you made it to the end of today's video, don't forget to hit that thumbs up and make sure you subscribe to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.